Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we began our discussion on the different order types available to Forex traders with a look at the market order. In today's lesson we're going to continue our discussion on the different order types available with a look at the all-important stop loss order and something which is known as a take profit order. So let's get started.
As we've discussed extensively in the money management section of our Basics of Trading course in the free course section of InformedTrades.com, it is not normally how good a trader is at finding entry points that separates the profitable traders from the unprofitable traders, but how good a trader is at exiting their positions. Luckily, most electronic platforms, including the one we have been practicing on, allow traders to leave standing orders on the platform which will close their trade if their stop loss level or take profit level is reached. This allows traders the freedom to step away from the computer if needed, instead of having to sit and wait for the market to reach their level. Because these orders are executed automatically, some traders also use them to better manage the emotions involved with closing out positions when their target price or stop loss levels are hit. To see what I'm talking about, let's log into our real-time demo trading accounts and place a couple more trades. If you've not done so already, I encourage you to pause this video now and click the link above this video if you're watching on InformedTrades.com, or to the right of this video if you're watching on YouTube, and register for a free real-time demo so you can follow along as well. Let's say, for example, that your analysis tells you that the current price for euro-dollar is a good sell price. Your analysis also shows you that 20 points above the current price would be a good level to exit the trade at a loss should the market move against you, and that 50 points below the trade is a good level to exit the trade at a profit should the market move in your favor. As we know from our previous lessons, the first step in the process to place this series of orders is to place the market order, so go ahead and click on the sell rate for euro-dollar and execute a one-lot trade. Once that trade is executed, it should show up in the open positions window of the platform where you can see the open and current close price for the trade. In this window, you will also see a column that says stop. Left click on this column, which will bring up the stop loss window. In this window, you will also have a line that says rate, and in this box you can change the rate to reflect the rate at which you would wish to be taken out of the market should the market trade against you. In this example, we said we would like to be taken out of the market if it trades 20 pips against us, so adjust the number in the window to reflect that and then click OK. For my purposes, I like to keep things simple and I round the pip value to the nearest pip. So here I've executed a trade at 158.52, and 20 pips above that is 158.72. So now that I've done this, you should see the new stop loss order appear in the stop column of the open positions window, where you now have an order which will close out the position should it reach that level. Next, we're going to click on the limit column of the open positions window, which is going to bring up the limit order or take profit window. For my example, I said that I'd like to take profits should the market trade 50 points in my favor, and again I ignore the fifth digit to make things simpler for me, so that is 158.02. Click new there, and that order moves down into the limit column of my open positions window. So I now have a stop loss order which is going to take me out of the market should the market trade to 1.5872, and a take profit order, which is going to take me out of the market should the market trade to 1.5802. Remember, I sold here to enter the position, so that's why the take profit order is below my entry price, and the stop loss order is above my entry price. Both the stop loss and limit order on this particular platform are known as what is called one cancels other, or OCO orders, which means that if your stop loss or limit price is hit, not only will the trade be closed, but the opposing stop loss or limit order, which was not hit, which will be canceled as well. Lastly, if you wish to change the rate for either your stop loss or limit order, you can do so by simply clicking on the stop loss or limit column, changing the rate, and then clicking the change button. For tonight's homework assignment, I encourage you to use some of the tools we've learned about in our Trading Basics course to find trading opportunities and place a trade with both a stop and a limit using the knowledge that we've learned here today. If you'd like to share your trade and analysis with the InformedTrades.com community, I'm sure we'd all love to see it, so feel free to post it in the comment section of this lesson. That's our lesson for today. In our next lesson, we'll go over another type of order which can be used to enter the market, which is known as an entry order. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comments section below. And good luck with your trading.